Welcome back to Bazaar Morning Call. Let's begin the day with a lot of stocks to talk about, and our entire research team is joining in for that. RBL and M&M will both be in focus after both the companies confirmed to CNBC-TV18's news break. M&M has gone ahead and bought 3.5% stake in RBL Bank. Nisha joins in. She broke the story. So, Nisha, congratulations on that. She gets us all those details. Over to you.
Thanks so much, Sonia, for that. Yes, late last evening, after the market closed, both the companies, RBL Bank as well as Mahindra and Mahindra, had given a stock exchange clarification on our news break and confirmed to it. Now, what Mahindra and Mahindra has said is that they have bought 3.53% stake in RBL Bank, and that, remember, is done for 417 crore rupees at 197 rupees per share. Now, remember that this particular stock price is on the higher side if you really look at the 1-year chart, and the stock closed at about 52-week highs. Now, what I want to mention is going to be a two-part important thing. First, M&M has more importantly cleared in that notification that they may increase their stake up to 9.9% stake from 3.5% right now. That means there could be more buying by M&M in RBL Bank. That could spur up and keep the momentum going on that particular counter, and it could be in the green. But on the other side, Mahindra and Mahindra will have to articulate the strategic intent with which they have made this investment, and what is the nature of this non-core investment for an automaker, and why are they going up to 10% and investing the cash that they have on their books. So capital allocation and the strategy will need to be articulated to the markets, and Mahindra could see some concern on the stock on the basis of the articulation not being there as of now.
Absolutely. That's a very important point. So perhaps, we could see M&M in the red, because earlier they had said that they have a target to get to an 18% ROE for all their businesses, and they want to exit a lot of the non-core investments. So this goes against their earlier capital allocation policy. So that's why perhaps the street would want to also get some answers from them on why they're doing this.
I think the numbers are tomorrow as well,
yes.
Right? So, all right. So we'll keep an eye on both those two stocks. But let's hop across to Abhishek. He's here to tell us about Axis Bank. Well, Abhishek, a bit of a disappointment on the NIMs as well as an increase in the watch list.
Well, operationally a weak quarter. The decline in net interest margin is expected for all the banks. However, this has been lower than the expectation. So, expectation was of a 22 basis point, but it's declined only by 10 basis point on net interest margin. So, the bad part about the result is that it is one of the worst performance amongst peers with respect to core operating profit growth. So, core operating profit has declined by 8.7% quarter on quarter. Remember that Kotak Bank had seen a decline of 6.74%. HDFC Bank had declined by 0.8%, while ICICI Bank saw core operating profit growth of 0.15%. It is perhaps the only lender, as you mentioned, that has seen increase in watch list. Watch list in absolute value increased by 5.3% and now forms about 0.68% of the loans. Net interest margin is the lowest in last 3 quarters on expected line that we are seeing in the industry. Operating profits have declined quarter on quarter for second quarter in a row. So overall operating profits have declined by 3.9% quarter on quarter, which is the weakest growth that you are seeing in last 4 quarters. PNL, both the NI and PAT is below our poll. The good part about the result is that they have seen a loan growth of 22.5%, courtesy the Citi acquisition that they have done. Ex of Citi, the numbers look weak. Gross NPA ratio is the best in last 32 quarters or 8 years, and it has come in at 1.96%. Back to you.
Okay, thanks a lot for that, Abhishek. There's also Dr.Reddy's and Sun Pharma on our radar. Ekta is here to tell us more about that. Ekta, morning.
Morning. Well, Dr.Reddy's came out post-markets and it was a good set of numbers. Revenue came in at around 6,738 odd crores, better than our expectations. Margins came in at 31.7%. The street was anticipating 25.8%. Profit at around 1,400 crores versus expectations of around 1,041 crores. The US sales were the key driver, came in at around $390 million versus estimates of anywhere up to $370 million and versus $310 million in the previous quarter. India on an adjusted basis for one-offs was up in single digits. IIFL, however, says that they estimate $50 million of a Q-on-Q increase in the Revlimid generic sales. So that was the key contributor this quarter in terms of the numbers. And it has contributed 40 to 45% on an overall EBITDA from Q2 to Q4 of FY23. and valuations are at around 28 times to FY25 core earnings. So that's probably going to be the chink in the armor for Dr. Reddy's, that despite a good set of numbers, the stock has run up 37% from its 52-week low. It's already trading at punchy valuations, so the street might not see further upside because Revlimid generic is a limited competition opportunity. It will only last till FY26. Now coming to Sun Pharma, it will be in focus on account of Taro numbers, which were a complete disappointment. Sales were just about flat on a year-on-year basis. It was an operating loss of $7.9 million. Adjusted for one-offs, the operating loss was $1.7 million. It was just about a 0% margin, and net income came in at around $10.1 million. Ilara said US reported exceptionally poor Q1 numbers, that is Taro, and it contributes 4 to 5% of Q1 FY24 and FY24 consolidated EBITDA estimates for Sun.
All right, Ekta, thanks very much for that. Well, I think now for the weakest earnings set, that we'll address this morning, and that's from Tech Mahindra. We've had a few IT disappointments, but this was something else. Rima is here with details. Rima, morning.
Hi, good morning. It's a big miss. Revenues for Tech Mahindra have fallen by more than 4% on a quarter-on-quarter basis. Their key communication vertical has seen a revenue decline of 9.4% on a quarter-on-quarter basis. Margins have collapsed to 6.8%. There is a little bit of a one-off in the margins, but even then, even if you account for that, margins are much, much lower than what peers have reported. Deal wins have come down by nearly 40% on a quarter-on-quarter brokerages, deal win on a quarter-on-quarter basis, and brokerages have slashed down their EPS estimates. UBS cuts it by 19% for this year, 10% for next year, while Nomura lowers FY24 EPS estimates by 10%. So it's a big, big miss on revenues, margins, deal wins, all-round miss. Back to you.
All right, thanks for that, Rima. In fact, we'll have the management of Tech Mahindra at 8:35 a.m. to talk about the past quarter's numbers. Well, let's hop across to Mangalam to tell us about some of these FMCG companies which declared numbers. Mangalam, tell us about Tata Consumer as well as Colgate. Colgate was sparkling, right?
Colgate indeed was sparkling, but let's tell you about Tata Consumer. In fact, the Tata Consumer numbers were absolutely in line with what the street was anticipating. If you just take a look at the revenues, EBITDA and net profit, no difference whatsoever from what the CNBC-TV18 poll was. The internals, however, for Tata Consumer tell you the India business was doing a lot better. India grew at 15.5% as against street expectations of 10 to 12%. The international business was rather weak. It grew about just 7% versus expectations again of 10 to 12%. In India, the sparkling spots were the foods business that grew 24%, and Narishco, despite adverse weather conditions, Narishco grew by about 60%, and now as a result of which growth businesses account for 20% of their overall sales as against 15%. So that's a positive despite inline set of numbers. See green on Tata Consumer. Now Colgate, this is the best FMCG result in the large cap space we've seen so far. A big beat on the revenue, 1,300 crores versus street expectations of around 1,250 plus. EBITDA coming in at 418 crores, and this despite the company not letting down on any ad spends. It was largely led by premiumization and gross margin expansion, and the net profit coming in at 275 crores versus expectations of 250 crores. This despite an exceptional loss of 20 odd crores. The company said the toothpaste business recorded a high double-digit sales growth, and they're seeing early signs of recovery in rural India and pretty optimistic of the growth path going forward. So Prabha Narasimhan's strategy is working for Colgate finally.
All right, absolutely. Thanks very much, Mangalam, for that. So that's the Colgate set. Now, RVNL is the next one we're going to talk about. The stock's doubled this year, 100%. And I guess the government wants to book some profits. There's a OFS. Vivek is here with details. Vivek, morning.
Well, absolutely right. It's an opportune time for the government to pare its stake in the company and help it meet the minimum public shareholding norms. Now, remember, the news is that the government is looking to pare 5.36% stake in the company, and the route that they've chosen is the offer for sale route. Now, this particular OFS has two components. One is the base size. The base size of the OFS is 3.4% of the total equity, and the government has the option of choosing the green shoe option for selling an additional 1.96%. The floor price for this particular offer is 119 rupees a share, which is close to 11% discount to yesterday's closing price. Remember, the government held over 78% stake in the company at the end of the June quarter, expecting a mild red in this particular name on the back of the significant discount being given for the OFS.
Hey, thanks a lot for that. Well, Mangalam is back with us to talk about Marico. Mangalam, how did it look?
Well, Marico actually has gone ahead and bought 58% stake in a company called Satya Nutra for about 369 crores. Now, for those interested in the health and wellness food space, Satya Nutra is the one that owns the plant-based protein brand Plix. And it's a good acquisition, fits right in their digital and health food sort of strategy, and strong growth is what the company has shown. In fact, FY21 revenues for Plix were just around 11 odd crores, and FY23 it surged all the way up to 106 crores. So Marico is likely to scale that up. I've been a user of the brand, so I can vouch for the quality of Plix for sure.
All right, Mangalam, thanks a lot for that. Well, I'm looking at Vesuvius, and this stock is going to do very well in today's trading session. It trades very expensive, but these numbers are absolutely blockbuster. On a year-on-year basis, the revenues are up at close to around 20%, EBITDA was up close to around 70%, margins at around 17.2%. I haven't seen that in multiple years, and if my memory serves me right, I think this is the highest margin since 2018 itself. So the margins look very, very good. The profitability as well got a leg up, was up close to around 80%, and they're sitting on cash of close to 600 crores, which is 11% of the current market capitalization. What's giving you further confidence of the refractory business is that now they're laying out capex of 88 crores odd. They're looking at doubling their capacity at their Andhra Pradesh unit. So it gets a thumbs up. Valuation-wise expensive, but the stock will do well because these numbers are very, very strong.
Okay, we'll keep an eye out on Vesuvius India. Here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow: RBL Bank, Dr.Reddy, Tata Consumer, Colgate, Marico and Vesuvius. While stocks with negative news flow: Axis Bank, Pharma, Tech Mahindra and RVNL. So a lot of big nifty companies disappointing with their numbers. Let's take a quick break. On the other side, we'll pose all of these questions to Anand Tandon. What do we do with some of these names like Tech Mahindra and Axis Bank? More on that in a bit. We'll also connect with the management of Tech Mahindra to find out what went wrong in this quarter's number. Stay tuned.